So I'm very pleased to welcome Jonathan Briggs, who is Director of Development and Delivery at VPI. Thank you so much for being here, Jonathan. So just to begin with, can you tell us a little bit about how CCUS fits in with the broader energy transition strategy? What is the value it provides?
Sure. So, firstly, who is VPI? Just briefly, VPI is a company that owns and operates 5 power plants in the UK, material over 3.5 gigawatts of generation. But we're solvers of the sort of energy transition space. We invest in batteries, both in Ireland and actually going out to Europe as well. And we like to see ourselves as a company that tries to work in this energy transition space. We have a CCS project at our largest asset up in the Humber, project called Humber Zero. So we're very invested in CCS. It's an integral part of our business. Why is CCS important? Well, first of all, you don't get to 2050 and net zero without CCS. And really, why is that? Because any industry and hard to abate sectors, you can't get to net zero without CCS. Looking even beyond that, or just in terms of our use of fossil fuels, we're using fossil fuels at the same rate we used them in the 60s almost. So we've got to find a transition way of working from the emissions we create from fossil fuels, and CCS does that. So it's not really an option, certainly if you want to get to 2050 and net zero, but there are some massive opportunities. So just to start the ball rolling in terms of what it offers, and particularly to the UK, there's really first area is something that the UK enjoys, which is geologic storage. Not every geography has the opportunity that we have with CCS, and we certainly have it in the North Sea. We have a developed, mature oil and gas set of infrastructure and industry, which is prime for transition to storage. So, and the CCSA, the Carbon Capture and Storage Association, has predicted that in 2050, that storage industry can provide 30 billion a year to the UK. So there's a massive opportunity in storage. There's secondly, and all as important, is the industry that is waiting to invest in this space. And so I'm one company that has a project that is ready to invest in the Humber Zero. That alone is $1.5 billion of private investment. Across the sector in general, we're at this point where there's something like 20 to 30 billion of private investment waiting to deploy. And I'm sure you're going to get to what's needed. But lastly, one thing I'd say is there's also an immediate economic impact. The Economic and Climate Investments Unit recently did a study that came out with what every pound you put into the net zero space, whether it's CCS or anything else, translates into about £1.89 the same year. So you can already see places like Teesside growing.
That's amazing. And there's clearly a huge return on investment, as you just mentioned. Before we get on to what's needed to get to that investment, you've talked a lot about the benefits, but what about the costs? How do the benefits compare against those costs, the environmental costs, the financial costs?
Well, certainly. So again, CCS is, as I've tried to sort of demonstrate, there is a cost element, but it's the benefit that you should be looking to. So the economic cost to benefit ratio is really important. A lot of projects out there, ours included, talk about an economic cost benefit ratio of about 3. So 3 to 1. And then beyond what I said in terms of the immediate impacts of the environment, but there's an economic cost benefit ratio of the long term of about 3. I think in terms of, I think your question was in terms of the environmental impact. Well, first of all, the environmental impact is we don't get to 2050 and that's it if we don't deploy it. So That's really important. It's a tried and tested technology. Capture technology has been used for decades. And every single gas processing plant, every liquefied natural gas plant will have a CO2 capture unit, because you need to take the carbon out for the future use of that gas. So it's tried and tested technology. We need to be deploying it at the scale that hasn't been done before.
Of course. So now coming on to why it hasn't, what do we need to get there? You've said that there is investment waiting to happen. Why are we not able to get that investment? What's needed to kind of scale it up and make it more commercially viable?
Really, like any market, I think, you look to in the economy, there's no economic signal beyond a value for carbon that's fluctuated quite a lot recently. So really, the desire to mitigate carbon comes from society's demand to decarbonize. So really, what's needed in this initial phase, as we look to 2050, is deployment via a government support mechanism. The good news is, in the UK, we have actually been on a pathway to define what's needed to get to a material and thriving CCS business. And really, we're at that point where we just need to see it through. So we have projects that have been deployed in Teesside, in the northwest. We need to do more. We need to decarbonize our major industrial centres. So the government's plan has always been to deploy projects in 4 industrial centres. So right now we just need to keep moving and keep that momentum. But fundamentally, it does come back to the government. I would say government commitment via the strategies that they themselves have already developed.
That's interesting. Do you think international coordination across governments plays a role in this as well, or do you think it's very individual governments? Because you talked about carbon pricing as well, which requires some level of coordination.
I think the coordination, there's a lot of learning for sure around the deployment of CCS. There's different jurisdictions obviously approaching the same I would say the same deployment of industry in different ways. You can see how it's actually maturing quite quickly and at scale in places like the Middle East, even, and has been in North America. But what's in terms of the need to collaborate across geographies, it's really about making sure that we don't reinvent the wheel. And certainly there's a lot to be gained from that.
And in terms of just going back to the investment side for a second, do you think that there's more investment needed on the technological side as well in terms of developing the technology, or is it more in terms of scaling it up now and making it more widely used and viable?
I would say more the latter.
Okay.
The reasons, so there's a lot of technology development that is actually occurring in this space. A lot of I mentioned this a second ago, this is a tried and tested technology, but that's because certain technologies, and it's amine for any engineers out there, absorption of CO2 via solvents and amine solutions has been used for decades. The more step-out technologies that have not been deployed at the scale that we can deploy amine and the sort of tried and tested technologies today, those ones really show a lot of promise, but they're at the scale that you probably wouldn't invest billions into today. You'd want to bring them up in order, and that's actually the future. The future of CCS is also important, which is about how you drive down cost, equivalent to what you see in the UK again in offshore wind. You do that via getting to scale, building the infrastructure, using the infrastructure, and in terms of economies of scale, but also then you have access to deploying technologies that can really make a real step change in cost.
Exactly. It's that economies of scale you just mentioned. It's the initial upfront investment and then driving down those costs going forward.
Yeah.
Another concern, I guess, that people have around CCUS is that it could encourage the ongoing emissions. It could encourage people to continue to use fossil fuels. Is that a concern? And if so, how do we address that?
I think that's that's a responsibility of government to ensure that essentially CCS is really exactly as you described. It's a transition. But first and foremost, what CCS does is it provides a pathway from those industries that cannot abate otherwise. In terms of continued use of fossil fuels at the levels that we are today, then really that's a requirement of government to make sure that we're on a pathway again with the mechanisms that they have in place today, which is essentially carbon budgets, the other policy instruments that are also being developed and deployed to enable that transition. But fundamentally, CCS is needed because otherwise you don't have pathways for some industries.
Yeah, absolutely. As you said, there's some which are hard to abate, and there are no other options really apart from capturing the carbon that they are emitting.
Yeah.
We've got a couple of minutes left, so I'd like to open it up to the audience if we've got any questions. Yes, in front.
Good afternoon. Just got a static shock there. But Nikhil Chokley, partner in a private equity firm. I mean, I'm interested in the commercials. What is the best case cost of CCUS per ton, right? So I'm looking at it pragmatically as an investment use case, where on one hand, you've got nature-based solutions at around $7, $8. That's not fully loaded price, but that's what you can get those carbon credits at. And at the other end of the spectrum is CCUS. I mean, what is the best case scenario when the technology is mature, scaled up? What cost can we get a ton of carbon at?
Okay. So the time frame that you're really aiming for is once it's been deployed, once you've driven down the costs. If you take wind as an example, where the deployment costs over 20 years has basically been driven down to a third of what it was deployed at. In other words, you've taken out 2/3 of the cost. I don't think you can, it would not be hard to envisage a similar cost reduction curve for CCS. And the reasons why actually so that's one thing really important to say is, first of all, why would you believe that? Because you've got, again, it's about use of infrastructure, and it's also about the technologies that we touched on a second ago. But again, what you don't have, and this is a really important point compared to wind, is not just the cost side of the story, but the benefit side of the story. So it's back to, yes, you have a cost profile that you can believe going forward, but the economic benefit of, for example, the UK operating 80 billion tons of storage space when the rest of Europe has pretty much nothing. So it's the economic benefit potential that you have there as well that goes with that cost profile, which is really important around CCS.
There's no absolute number in mind, in your opinion?
It's really difficult to predict, but whatever if we start at, this is really dangerous territory, but honestly, a third of what you start with, comparable to offshore wind, would be entirely believable.
I think we have time for one more question. Yes, up front here. Thank you. Yep.
Hi, Chris Welsford, Espanchard. How serious, I mean, you may not be able to answer this, but how serious is the decision by BP to supposedly reduce their commitment to renewables? Because I know that they're a big investor in CCS and in the area that you're operating in the northeast. Thanks.
Well, obviously, I can't really speak for BP and their decision making, but clearly there's I think there's a lot in it for oil companies. The time frame that oil companies will be investing will obviously be, more than just 1 year to the year ahead. So clearly, their decisions around the long-term future is up for debate, and I'm not the one to have it. But I do think there's a lot that they bring in terms of a future that transitions away over a period of time. Too much change over a short period of time is never good for anyone. But I also think that they bring a lot of the know-how, the skills. So I can't speak to whether this is a fundamental transition away from an industry that, to be honest, they should be very interested in still.
Well, I think we're at time, but of course, I'm sure you'll be around to answer any other questions if people have any. But thank you so much, Jonathan, for joining us today and for taking the time. Thank you.